Welcome back to the deep dive. So we're digging deeper into ICT and his inner circle trader strategies.
Yeah.
You know that, right? This stuff is seriously next level. And today we're tackling a concept that's like the backbone of his whole approach, market structure. Get ready, because this is where the real magic happens. Now, ICT often uses futures markets to show his points, and we will be doing the same here. But remember, these principles he's talking about, they're kind of like universal trading secrets. You can use them across any asset you can think of. Okay, so let's break this down. Remember how everyone learns about trends when they're starting out? Connecting those highs and lows, higher highs, lower lows? Pretty simple, yeah. Well, ICT is like, hold up, not so fast. It's not that easy. He says that's way too simple and misses a really important point. Why is the market even moving like that in the first place? Is it a real trend, or is there something else going on behind the scenes driving the price action?
Yeah, he's got a point there. Blindly following higher highs and lower lows, that can actually be really dangerous, like you're walking right into a trap.
Oh, really?
Yeah, it's like these bigger players, algorithms, and institutions, they use those predictable patterns against traders.
You mean they use them to set off stop orders and shake out all the newbies?
Exactly. It's called a liquidity grab. They make these sudden press moves on purpose to trigger those stop orders, and then boom, they've got a pool of liquidity they can use however they want.
Wow, okay, that's kind of scary. So instead of just looking at the highs and lows, what does ICT focus on? He asks two really important questions. Is the market moving to grab that liquidity like we were just talking about to set off those stop losses? Or is it moving to rebalance after being pushed off balance, kind of like filling in a price gap?
See, and what I think is so cool about that is those questions point to something way bigger. It's not just random market stuff, Liquidity grabs, rebalancing it all suggests there are algorithms and institutions pulling the strings.
So he's basically giving us a way to understand how these big players control the market. And the best part is he doesn't just talk about it. He actually shows us how it works. In one of his videos, he's looking at the NASDAQ futures chart. And using his method, get this, he predicts a huge drop. And here's the kicker. He didn't just say it after it happened. He called it in advance, which just shows you how powerful this method can be.
Okay, so how does he actually break down market structure? He uses some specific terms, right?
He does. He talks about long-term highs and lows and short-term highs and lows. Those are pretty easy to get. But then there's another level, the intermediate term high-lows. And that's where things get really interesting.
Okay, hold on. Before we get too far into the weeds, can you explain what those long-term and short-term highs and lows are really quick? Sure. So imagine you're looking at a chart, right? The long-term high and lows are basically the highest point and the lowest point on that chart for whatever time frame you're looking at. So a daily chart, highest and lowest for the day.
Gotcha. So the short-term highs and lows are just like the smaller swings inside that bigger trend, right?
You got it. Think of them like waves important, but they don't control which way the whole tide is going.
Okay, that makes sense.
Okay.
So where do these intermediate term points fit in? And why are they so important in ICT strategy?
What makes intermediate term points so important is they're like leading indicators. They can actually signal when the market might reverse, especially if they don't behave how you'd expect within the larger trend. It's like the market is giving you subtle hints about what it's really going to do.
Oh, interesting. So it's like we're getting a sneak peek behind the curtain to see what the market's really up to. Can you give us an example?
Absolutely. Think about that failed bull flag pattern ICT talks about. Most traders, they see that and think the price is about to go way up. But because he understands intermediate terms, he sees it as a likely reversal point.
Wait, so you're saying that something that looks bullish on the surface could actually be bearish if you understand how it relates to these intermediate term points?
Exactly. And that's what's so powerful about this whole approach. It helps you see past those surface level patterns and understand what the market's really doing underneath it all.
Wait, I'm starting to see why this intermediate term concept is such a big deal. It's like having a secret weapon that most traders don't even know about. But how does ICT actually find these intermediate term highs and lows? What's he looking for on the charts?
That's a great question. And it leads us to one of ICT's biggest aha moments. He realized that these intermediate term points, they often happen because the market is trying to rebalance itself after being pushed off balance. It's like the market remembers where it's been, and those points kind of give away where it might be going.
Okay, so instead of just looking at these intermediate term highs and lows on their own, he's connecting them to this idea of market imbalances. Can you explain that a bit more? What does he actually mean by imbalance?
So picture this. You're watching the price, and suddenly, boom, It spikes way up or way down, something that just feels out of place compared to how it was moving before. That's a market imbalance. It means either the buyers or the sellers got a little too excited and pushed the price too far, too fast.
So it's like this sudden burst of energy that disrupts the market's normal flow.
Exactly. But here's the thing. The market doesn't like to stay out of whack for very long. It always wants to find its way back to a comfortable middle ground.
So are you saying that these intermediate term points often pop up as the market tries to smooth things over? Like it overreacted and now it's trying to get back to where it should be?
Precisely. And this whole rebalancing act, it's like a giant flashing sign. It shows us where the market is probably going to go next because it's like we're seeing the algorithms at work, cleaning up the mess and getting everything back in order.
Wow, this is seriously cool stuff.
Yeah.
So it's not just about finding these intermediate term highs and lows. We have to understand why they're happening in the first place and how they relate to these market imbalances, like a whole new way of reading the charts.
You got it. And this is where ICT's approach differs from that traditional order block theory. Have you heard of order blocks before?
Yeah, I've come across them. They're basically like these groups of buy or sell orders that create those support and resistance levels we see on the charts, right?
Exactly. Now, most people who use order block theory, they look for trade entries at the edges of those blocks. But ICT, he takes it a step further. He dives inside those blocks looking for those little imbalances.
Wait, hold up. So instead of just looking at the edges of the order block, like most traders, he's looking for imbalances within the order block itself to find his entry points.
You got it. He believes those imbalances within the order blocks give you a much better chance of finding a good trade.
This is blowing my mind. Okay, so to recap, we've talked about how ICT says higher high, lower lows. Isn't the whole story his focus on using different term levels to understand market structure, especially that intermediate term, and now how all of that connects to market imbalances? Oh, and we even touched on how his way of using order blocks is different from what most traders do.
It's a lot to take in, I know. But you're doing great. Are you ready to see how this all comes together in a real-life example?
Dude, let's do it. Okay, so we're about to see this all play out on a chart, right? I am so ready for this. But before we dive into that, I want to make sure we've got all the pieces in place. Let's recap what we've learned about ICT's approach to market structure. So first things first, don't get blinded by those higher highs and lower lows. We've got to look deeper, understand the why behind what the market's doing. And ICT gives us those two key questions to ask. Is the market making a liquidity grab or trying to fix an imbalance? Next up, remember those intermediate term highs and lows. They're not just random price swings. They can actually give us clues about where the market might be heading. And lastly, ICT uses order blocks way differently than most traders. He's not just hanging out at the edges, he's going right for those little imbalances inside the order block. That's where the magic happens.
Okay, now that that's all fresh in our minds, let's walk through a real example. Picture a 15-minute NASDAQ Q chart. Got it. Okay.
Good. Know what you're looking for.
You see the market going up, right? Then suddenly, bam, this sharp drop out of nowhere. That, my friend, is a market imbalance. Like someone hit the sell button a little too hard and threw things off balance.
Okay, yeah, I see that dip. It's definitely sticking out. So this is where the whole rebalancing thing comes in, right? The market wants to smooth things out.
Exactly. Now watch what happens as the market recovers from that dip. It creates what ICT calls an intermediate term high. Think of it like a line in the sand, a point where the market might struggle to move past because it's trying to find that balance again.
Okay, so that intermediate term high is our reference point. We know the market likes to be balanced, so it might play out right around there. Now, how does ICT actually use this to find his entry points? This is where it gets really cool, and he gives options for different types of traders. There are two possible short entry points here. The first one, for traders who like a little more risk, is right below the bottom of that initial drop we were talking about.
Got it. So if you're feeling bold, you could take the trade right there, betting that the market's going to reverse. What about the more cautious approach?
For traders who like to be a little safer, ICT says look for a second entry point. This one happens when the price tries to rally back up to that intermediate term high but can't quite break through. That failure to break through is like another sign that the market is rebalancing and probably heading down.
I like how he's got something for everyone, but the key is that initial imbalance and that intermediate term high that happens afterwards.
You got it. And this is where using multiple time frames comes in. He might use the hourly chart to see the bigger picture. Is the market trending up, down, or just hanging out? And to find the overall trade setup.
So the hourly chart gives you context,
Yeah.
but then you'd switch to the 15-minute chart for what?
That 15-minute chart is where you fine-tune those entry and exit points. depending on whether you're taking the risky entry or playing it safe.
Multiple layers of confirmation. I love
Yeah.
it. So we're using the daily chart to see the overall market vibe, the hourly chart to find the setup, and then that 15-minute chart to get in and out at exactly the right moment.
Exactly. Each time frame has its own role. It's about putting the whole puzzle together.
It's like a market symphony, each instrument playing its part. Okay, so far we've covered ICT's take on market structure, how important imbalances and rebalancing are, and how he uses multiple time frames to fine-tune his entries and exits. But there's one more key concept he talks about that adds a whole other dimension: institutional order flow. I'll admit that one sounded a little intimidating at first.
I get it, but it's not as complicated as it sounds. Think of it like this. Imagine you're walking on a beach and you see footprints in the sand. You can tell a lot about who is there just by looking at them, right?
Right. Was it an adult or a kid? Were they running or walking?
Exactly. Institutional order flow is the same idea. It's about learning to read the signs that these big institutions, the whales of Wall Street, leave behind when they buy and sell. Those signs can give us valuable clues about what they're up to.
So we're talking about reading between the lines, looking for those subtle hints that most traders miss.
Exactly. ICT believes that institutions leave behind these telltale signs in how they form candlesticks. Remember those.
Of course. Candlesticks are like the language of price action. Each one tells a story about what happened during that time frame.
Right. And if we pay close attention to how those candlesticks are formed, we can start to see patterns that suggest institutions are at work.
Okay, this is getting good. So how do we actually spot these footprints, these patterns that tell us institutions are involved? What am I looking for on the chart? Okay, give me the secret sauce. What kind of candlestick patterns make your spidey sense tingle?
Here's a simple but powerful one. In a bull market, keep your eyes peeled for down-closed candles that act as support.
Down-closed candles as support. You mean when the price dips down but then rallies back up to close near the high? What's so special about those in a bull market?
Here's what's fascinating. Those down-closed candles often show where institutions have been buying. Think about it. If a big institution wants to load up on an asset, they can't just buy a ton all at once. That would send the price through the roof.
Right, they'd end up hurting themselves by pushing the price up as they're trying to buy.
Exactly. So they have to be sneaky. They buy gradually, often accumulating on those dips down. Those dips create those down-closed candles. And as the institutions buy, the price finds support and bounces back up.
So those down-closed candles are like little breadcrumbs showing us where the institutions have been buying. It's like they're leaving a trail for us to follow.
You got it. And here's the cool part. Once those institutional buying zones are established, the price tends to respect them. You'll often see the price bounce off those levels again and again. It's like they've created these invisible barriers in the market.
Invisible barriers that we can actually see if we know where to look. That's incredible.
And guess what? It works the other way too. In a bear market, watch for those up-close candles creating resistance. Those often show where institutions have been selling.
So it's like a mirror image. Up-close candles are resistance in a bear market. Down-close candles are support in a bull market. I think I'm starting to see these institutional footprints everywhere.
That's the key. Once you start seeing the market through this lens, everything changes. You're not just reacting to random price movements anymore. You're starting to understand the forces that are actually driving those movements.
This is all so powerful. It's like you've given us X-ray vision into the market. We're not just trading anymore. We're decoding the matrix.
And that's what's so cool about ICT's whole approach. It's not about following indicators blindly. It's about truly getting how the market works at a much deeper level.
You know, when we started this deep dive, I never thought we'd go this deep down the rabbit hole of market structure. This has been mind-blowing.
It's been great sharing this with you.
The pleasure is all ours. And to you, our amazing listeners, thank you so much for coming along on this journey with us. Remember, we've only scratched the surface. Keep digging into ICT's work, keep studying those charts, and you never know what hidden treasures you might find.
And as you keep learning, remember to question everything. Don't just take what you see for granted. Look for those hidden forces, those institutional footprints that are really shaping the market.
That is such good advice. And on that note, it's time to wrap up this deep dive. For even more insights and adventures in the world of trading, check out our other episodes. We've got a whole treasure trove of knowledge waiting for you. Until next time, happy trading, everyone.